We're jumping straight into Redwire Corporation today. Everyone is watching the price action, but the real story is the massive pivot to European defense and space infrastructure.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get going, make sure you subscribe and hit that like button. You really don't want to miss these, especially with how fast everything is moving here in 2026.
It has been a wild start to the year. No kidding.
Right.
I mean, we're sitting here, it's late January 2026, and if you've seen a chart for Redwire lately, you'd think it was a glitch. The stock's up something like 50% in just a couple of weeks.
It's just a vertical line. And, when a ticker does that, my phone starts blowing up.
Of course.
Everyone's asking the same thing. Is this the next SpaceX? Did they launch something huge? But that's where the story gets, well, way more interesting.
It does.
Yeah.
Because they aren't a launch company.
Not at all.
And that's maybe the single most important thing to get straight right up front. Watching a rocket launch is, it's sexy, everyone loves it, but it's also becoming a commodity.
A race to the bottom on price.
It's a race to the bottom. Redwire is not playing that game. They're getting all this attention because the market's finally waking up to the fact that satellites need more than just a taxi to orbit. They have to actually do stuff when they get there.
The picks and shovels analogy feels right here.
That's one.
In the gold rush, it wasn't the prospectors who got rich, it was the guys selling the shovels.
That's it, exactly. Redwire is the hardware store for this new space economy. It doesn't matter if it's a spy satellite, a commercial space station, or, some science probe.
They all need the same basic stuff.
They all need power, they need to navigate, they need to dock. So Redwire makes the solar arrays, the sensors, the docking ports. They're betting on the amount of activity in space, not which rocket company wins the bid.
Okay, so if they're the infrastructure play, why the huge jump in price right now? The company's been public for a bit. Why is January 2026 the moment everyone decided to jump in?
It's a perfect storm, really. A convergence of three big catalysts that the market was, frankly, sleeping on. First, you have this Golden Dome chatter.
Bogota.
Second, their European business is just exploding. And third, the numbers, the actual financials, are starting to show they're graduating from a science project into an industrial scale company.
Let's start with Europe then, because I saw that number and had to read it twice. European revenue grew 117% year over year. That's insane.
It's staggering. I mean, to double your business in a market like aerospace in just 1 year is, well, it's almost unheard of. But you have to look at the geopolitics of it.
Europe is playing catch-up.
They are terrified of being left behind. They see the U.S. and China sprinting ahead, and they're just opening the checkbook. Redwire has managed to position itself perfectly to catch all that cash.
And it's not just small parts, right? I saw they landed a big contract for the exploration company's Nix vehicle.
The Nix spacecraft.
Yeah.
Yeah, that's an 8-figure deal for the docking systems. And Nix is a huge program. Think of it as Europe's version of a Dragon cargo capsule.
A reusable truck for space.
Exactly. And the docking system it's just mission critical.
Yeah.
You're connecting two objects moving at 17,000 miles an hour. If you get that wrong, you don't just have a fender bender.
You have a disaster.
You have billions of dollars of hardware turning into shrapnel. So the fact that they trusted Redwire with that, it's a massive vote of confidence.
And it's not just private companies. The European Space Agency, ESA, is in on this too.
Correct. They got the Syndio 3 payload contract. That basically makes them a go-to partner for ESA's big infrastructure plans. And for the stock, this is vital because it diversifies them away from just the U.S. government budget.
Right. It's a hedge. If Congress has a shutdown, the Euros are still paying their bills.
Exactly. It makes the revenue much more stable.
Okay, let's talk about the Golden Dome. I keep seeing this phrase pop up everywhere. It sounds like something from a spy movie. What is it?
It does, doesn't it? But it's very real. It's basically the term for this next-generation missile defense network. Think European Sky Shield and the new U.S. tracking satellites. We're in an age of hypersonic missiles now.
An old radar can't see them.
Can't see them fast enough. The curvature of the Earth gets in the way. You have to have eyes in space, looking down.
Satellites? Lots of them.
Lots of them. And not just way out in high orbit. You need them close. And this brings us to a really technical but super important part of the Redwire story. It's called VLEO.
VLEO. I've seen that acronym. What's the deal?
Very low Earth orbit. So a typical satellite is maybe 500 kilometers up. VLEO is, well, it's like 250, maybe 300 kilometers. You're basically skimming the atmosphere.
What's the advantage of being that low?
It's physics. You're closer. So you can use smaller cameras to get super high resolution images. And your signal lag, the latency, is much lower.
But wait, wouldn't the atmosphere just, I don't know, drag the satellite down, make it burn up?
That is the billion-dollar engineering problem. And Redwire thinks they've solved it. They have a $44 million contract for a program called Otter to build a satellite that can survive down there. It has to be aerodynamic, which is a weird thing to say about a satellite.
And it needs an engine to constantly fight that drag.
Constant, efficient propulsion. If they can crack that and mass-produce these VLEO sats, they become the absolute backbone of that Golden Dome network.
Okay, that connects all the dots. But they didn't stop there. They went and bought a drone company. That seems like a left turn.
This was the move nobody saw coming.
Yeah.
The sleeper hit.
Yeah.
Mid-2025, they bought a company called Edge Autonomy.
And they make what, quadcopters?
No, these are high-endurance, air-breathing drones. The Stalker, the Penguin, military-grade surveillance stuff.
So now they have assets in space and assets in the air.
It's a strategy they call dual domain. On a modern battlefield, you want a satellite to find a target, and then you immediately want a drone overhead to track it. By owning both pieces, Redwire can sell a whole integrated system to NATO and other allies.
So they're not just a space company anymore. They're trying to become a prime defense contractor.
That's the pivot. And that's why the stock is getting re-rated. A space startup is risky. A defense contractor with NATO contracts, that's a whole different ballgame. That's a steady paycheck.
Which brings us to their moat. How do they defend this business?
Through what you called sticky contracts.
Right.
Let's say you're NASA building the Lunar Gateway space station. You spend years designing the whole thing around Redwire's Rosé solar arrays. They have a certain weight, certain voltage, they unfold in a specific way.
You can't just decide one day to go with a cheaper competitor.
You'd have to redesign the entire space station. It would cost billions and add years to the schedule. So once Redwire is designed in, they are locked in for decades. That's why their contracted backlog is sitting at over $355 million. That's not potential money. That's work they are already contracted to do.
Okay, the bull case is pretty compelling. You've got 50% revenue growth. They're becoming critical to European defense. They're building the tech for this Golden Dome. And their customers can't easily fire them. Sounds like a slam dunk.
It really does. Which is why I have to be the buzzkill now.
Uh-oh.
Because if you only look at the headlines, you miss the very real risks buried deep in their financial filings.
The bear case. Let's hear it.
Okay, first and foremost, profitability. Or, well, the lack of it. That $103 million in revenue in Q3. Fantastic.
Right.
In that same quarter, they posted a net loss of more than $41 million.
Wow. So for every dollar they sell, they're spending about $1.40.
That's pretty much it, yeah. And on a trailing 12-month basis, the loss is around $268 million. They're just burning cash to achieve this growth.
And that cash burn leads to one place, a cash crunch. What's their runway look like?
It's the biggest question mark for 2026. Their current ratio is okay, about 1.4, so they're not going out of business next week. But at this burn rate, they will almost certainly need to raise more money this year.
Which, for a public company, usually means one thing.
Dilution. Selling more stock.
Yeah.
If they do that, your piece of the pie gets smaller. Big investors hate that, and just the threat of it can put a lid on the stock price.
I also saw something a bit confusing with the insiders. The CEO, Peter Canito, he's been buying shares. That's usually a great sign.
It is a bullish signal, for sure.
Yeah.
You want the captain buying shares of his own ship. But you have to balance that against the other side of the trade.
Which is?
Their biggest backer, a private equity firm called AE Industrial Partners, just sold a huge chunk of stock. We're talking something like $150 million worth just this month.
So the CEO is buying a few thousand shares, but the original smart money is selling millions.
That's the mixed signal. It suggests that the people who know the company best think this big 50% run-up is a great time to take some chips off the table. As a retail investor, that should give you pause.
That's a major red flag. And what about execution? You said these government contracts are sticky, but aren't a lot of them fixed price?
Yes, and this is the trap. It's a double-edged sword. Fixed price means Redwire tells NASA they'll build a part for, say, $10 million. Period. If their costs go up, if there's an engineering problem and it ends up costing them $12 million to build.
They eat that $2 million loss.
Every single penny. The government doesn't bail them out, and this isn't theoretical. It happened to them in the last quarter. They had to take an $8.3 million charge for what they call unfavorable EAC changes.
EAC, break that down.
Estimate at completion. It's accountant speak for, oops, we just realized this project is going to cost a lot more to finish than we originally budgeted.
So their own forecasts were wrong.
Exactly. And if that happens on a small project, it's a ding. If it happens on a massive program like those VLEO satellites,
Yeah.
those small losses could become gigantic ones fast.
So the bare thesis is they're growing like crazy, but they're losing money on every sale. They might have to dilute shareholders to survive, and the biggest investors are selling into the rally.
That sums it up pretty well. It's a race. Can they grow fast enough to become profitable before the bank account hits zero?
Okay, so for everyone listening, what are the key things to watch over the next, say, 30 to 60 days? What are the big triggers?
The calendar is packed. First up is their Q4 and full-year earnings report. That should be late February or early March.
And we're looking past the headline revenue number.
Revenue is vanity now. We know they can grow sales. I want to see margin improvement. Are they losing less money for every dollar they bring in? If revenue grows but their losses get even bigger, this stock is going to get hammered.
Yeah.
They have to show a clear path to actually making money.
What about on the defense side? The Golden Dome.
You want to watch for any news out of DARPA about that Otter program, the VLEO satellite. A successful test, a new order, anything that proves the tech works, and any new drone sales to a NATO country would be a huge proof point for that edge autonomy acquisition.
And NASA.
The Lunar Gateway. We need to see them hitting their production milestones for those big solar arrays. The launch is scheduled for around 2027, so any news about delays or, God forbid, more of those EAC cost overruns would be a very bad sign.
You know, if you zoom out from all this, from the contracts and the cash burn, what we're really talking about is industrialization of space.
That is the big picture, absolutely. We're moving beyond just planting flags. We're building a real economy up there with supply chains and infrastructure.
And the question is Redwire building the railroads?
That's the trillion-dollar question.
Yeah.
Because you go back and look, a lot of the original railroad companies went bankrupt. They laid the track, but they burned too much cash doing it. The track stayed, but the company disappeared. Redwire is in a fight to prove they're the company that survives, not the one that goes bust.
That's a really good way to frame it. The tech is inevitable, but the company might not be.
Precisely. The space economy will have solar arrays and docking ports. That's a certainty. The question is whether Redwire will be the one to capture that value, or if they just burn out and get acquired for parts by one of the big guys. That's the bet you're making.
The difference between being a pioneer and being a settler.
And 2026 is the year we find out which one they are.
Well, this is a fascinating one. We'll be watching closely. It's high risk, high reward, and right at the center of this massive new build-out.
Definitely not going to be a boring one to follow.
Not at all. All right, that's our look at Redwire. We will be back as soon as those earnings drop to see which way the margins are headed. Until then, keep your head in the stars, but maybe keep one eye on that cash flow statement. Thanks for tuning in. Subscribe, hit like, and we'll catch you on the next one.